High-risk investment. Trading on margin carries a high level of risk and may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with trading and seek advice from an independent financial advisor if you have any doubts. Market opinions. Any opinions, news, research, analyses, prices, or other information contained on this video is provided as general market commentary and does not constitute investment advice. Master the Markets will not accept liability for any loss or damage, including without limitation to any loss of profit, which may arise directly or indirectly from use of or reliance on such information.
Hello traders, and welcome to our live trading workshop webinar today. Today, for those of you joining in for the first time, our format is usually in what we first look at is the live trading potential trades that are setting up based on price and volume, okay, that Master the Markets and Trade Guider have put together. Now, the other thing is that we'll be covering a topic for today as well, and the topic is going to be on the 3 core principles of volume spread analysis, okay, from Tom Williams. And Gavin Holmes, CEO of Trade Guider, is going to be talking about that. And then third, we will usually talk about the upcoming events that are coming up and also a Q&A session to wrap up, okay? So that's what this session has in store for you and more. Right, traders, those of you joining in for the first time, it's Stu Napan here, founder of Master the Markets Illiterates Conference and the Traders Open Day. And I'm joined in by my good friend and CEO of Trade Guider, Gavin Holmes. Hi, Gavin.
Yeah, hello everyone, and hello Chiru, and hello to Kyron and to Glenn out in India. Welcome to you all. Really great week last week, and it's just getting better this week as well. We've got lots to show you. I'm currently in a position in gold, which we can talk about later. Some of you have been watching the YouTube videos that we do. Want a big shout out there to Paul Godfrey out in Australia. Paul, I did see your email earlier, but unfortunately I've been like trading all night, and so I was in bed when I finally got up and looked at your email. But now Laura, my wife, is traveling back to Chicago on a plane right now, so I'm free, which means I can spend as much time as I want looking at charts. But yeah, we'll talk about this today. And Paul, I'll probably call you tomorrow, which I've got a free day tomorrow. It's much easier because I'm in positions right now. Yeah, Turu was talking there about what we're going to talk about today. There are some very key principles that we look at in volume spread analysis. And what I've done is I've got to, because I had time last night when Laura was packing, is I've gone back in time and found some PowerPoints that I did with Tom that we put together. Do you know something? It's quite fascinating. What happened in the past repeats itself. And in the British pound, for instance, in gold, it's absolutely doing it. And so when you look back in time, and I look back at my books, and I reread last night some of the chapters from Trading in the Shadow of the Smart Money, it's so relevant today. And I thought, that can't be right. It can't be relevant. I wrote that in 2010. You know, it was published in 2012. It can't be relevant, but it is. And I'll show you. And this is why I love what I do. And that's the other thing that I was watching a program last night. I don't watch TV very much, but there was a great article, and you know, it wasn't just an article, it was actually a documentary about the late Ozzy Osbourne, and God bless him. I'm not a heavy metal fan, but he was part of my childhood growing up. Most of my friends loved Black Sabbath, if you know who they are, right? They were a pop group. Well, they were a pop group, actually. They were inspirational. A bit like we're trying to create new stuff in the trading arena. Ozzy Osbourne was trying to create something in what we now call it heavy metal. And he passed away a couple of days ago. And I just want to take a minute to pay my respects to him, because he was part of my childhood. When I say childhood, I'd be about 10 or 11 years old when all my friends were saying, have you heard Black Sabbath? They're playing at this and they're doing this. And I never watched them live, but all my friends did. And they'd be, when I go to a party, the first thing they put on would be a record by that pop group. And so I've got total respect for someone that made a difference to people's lives, and Ozzy Osbourne did it in a very positive way. And we talk about positivity being positive. It's in my third book. I wish I'd have written a chapter about the inspiration that someone like that had. So I dedicate this webinar to Ozzy Osbourne. Some of you never heard of him, but many of you probably will have, because especially if you're in America, he was very famous in America because he moved to Los Angeles and started his own show, like a reality TV show, with his wife Sharon. So I'm obviously disappointed that he's gone, but at the same time, Tira and I are trying to do something that Ozzy Osbourne did. He literally raised awareness of a new era of pop, which we now call, hard rock, or, metal rock, or whatever we call it. Tira and I are trying to raise awareness of the Wyckoff method, the smart money indicator, and we're doing it it's slow. I'll be honest, it's slow. I wish we could accelerate this, and I think I found a way to do that, because we found 55,000 people on our database that haven't heard from us, and we're going to sort that out. That's a big number. But then there's many other places that people are now approaching me from all different areas, because of the books that have been published. And so we will make this work, guaranteed. Okay. And today I dedicate this obviously to Ozzy Osbourne, because I followed him for a while, and then to Tom Williams, and obviously everyone else that works in the team, because ultimately what we're trying to achieve here is a goal. You have to. It's like the Lionesses. They played yesterday. They're playing Italy in the Euros, and they were down with 96 minutes gone, and they won. How did they do it? Belief. Simple as that. They believed in themselves. They got an equaliser, and they went to extra time, and they were in extra time, second half, and they got a penalty, and they scored it, and it was done. So today we're going to talk about some key principles in volume spread analysis, which works with SMI, which many of you know, smart money indicators. And when we look at those things, if you look at gold, they're all going to align. And then we look at the NASDAQ, and that's going to align. So I'm looking forward to a great session. Turu, back to you.
Right. So let's do this. Just give me 1 second, guys. Let me do this. Right. That should be a bit more better, so I'm not fighting against those noise out there. Right. So I was just taking a look at euro dollar and Brent, and then we will then also take a look on the gold that Gavin is riding the move at the moment. See if this thing sets up or not. So I'm was recording the time frames trend. Let me just quickly double check over here as well. Most of the time frames on the euro dollar and the Brent is what I'm taking a look at the moment, is pointing to as an uptrend basically. So here we got an uptrend phase 1, because I only take a look at the ones which the range hasn't formed, where our strategy principle is based on a recurring principle, okay? That's how we construct the strategies. You can see this is an uptrend phase 1 as well, but one thing that you quickly notice is that swing is overextended, isn't it not, traders, right? So there's a large probability that top may confirm very soon. So here, in terms of your 4-hour there, so that is pointing towards an uptrend phase 1 as well, but it's low OE. So let me just record it on this table over here, and I'll show it to you in a moment. So I'm just going to just quickly just shift to here, uptrend phase 1, then we got 4-hour, we got uptrend phase 1 as well. On the 1-hour, what we got is an uptrend phase 2, if a big buyer bar coming in play, and then we go on the 15-minute. I just like to record down all the trend first. Then we got a downtrend phase 1, which highly probably, if it takes out that high, that's going to turn around. 1.75 is equal high at the moment. Let's see if it does take that out. Then it will turn around. Okay, now you see, there you go. So you did turn around that. So I will point that as an uptrend phase 1 at the moment. Okay, now in terms of the bar mechanics, let's take a look at the bar mechanics. If they don't fit, we usually won't take a trade according to this strategy. But according to other strategies where you're just purely taking a look at just the bar price action alone and not trend correlation across different time frames, you can do that. But as me and Gavin have always said, every strategy will have its own pros and cons and have its own stats as well. In terms of the stretch basis, you can see over here is taken out the lowest stretch at the moment. So that is pointing towards the downside, whereas the trends are all pointing towards the upside. Range lines, you can see that the last range line at about 12, around there, it did take it to the downside over there as well. So in terms of the bar, it's pointing to the downside as well over here. So I will just record that down. Latest is lower range. There's a downside. Now, let's take a look at the previous day high and low. Okay, so that has taken out the previous day high, so which we can see over here. Then let me do that as well. And that 0.8 ATR range, it hasn't done that yet. That's 56. That's just 50. Okay, so entry bias, in fact, don't really have. It's a bit confusing in this one, but if I just take a look at volume alone, I would say now it's looking to turn around. So if you see here, traders, this is what I've got. So we first collect all the data. We went through this much more in detail in Live Trading Week as well. Once you guys get the 7 steps to CTP, or those of you already on our database, we will send that over to you. Watch the recordings when you get some time. Okay. So in terms of this one over here, if you look at euro dollar, you can see that across all the time frames is an uptrend, right? Trend alignment. It's all an uptrend at the moment. Yes. Now, in terms of direction alignment, there's only one time frame which is saying an uptrend phase 2 at the moment, right? Which is to the downside. But overall, all 3 time frames are pointing to the same direction up, and the trend is up as well. But then, if you look at the bar mechanics, right, the lower stretch has been taken out. The range lines is also to the downside. Broad to ST is also to the downside. But then the previous daily high has been taken out. So very mixed signals over here in terms of the bar mechanics. But if you wanted to take on another strategy, see, that's why very important that stay consistent with your strategy rules. If it doesn't fit your strategy rules, don't trade according to that strategy. You can always create another strategy, then based on different rules, which you then take it. The real key here is the consistency. for the edge of the strategy to monetize itself, okay, or for it to realize itself. So that's on euro dollar. So according to this strategy that we trade over here, highly probably it's not giving me a go ahead. If I were to take a look on a direction bias over here, I would take a look on from a direction bias. I will still take a look on from the downside because of the bar mechanics. That's all I'm taking a look at. In fact, if I were to take a look at the range being formed for today, 0.8 times 73, let me do that. That's about 58.4. What I'll be taking a look at, just gotta be careful because the trend is quite strong here. I might get caught in between. But if I were to look into this, it's not the best on my setup, so I will probably keep on my hands on this one. And I want to talk about the volume a little bit as well. I'll talk about that in a minute. 1.1780, 11780 minus 58. Okay, 58. That will give me 11722. 11722 is about here. Okay, so just a little bit more on that side. Now, I do see a quick big volume spike over here on this bar over there. Actually, the one on the before one, right? So if I were to go on the trading view, that's a bit more obvious there. So let's take a look. So there you go. So on the 15-minute, you can see there's a big volume spike over here, which turned the trend around, okay? But before we jump in quick onto the reversal of trend, wait for this bar to close and see how that performs, okay? A very key one that you can see that if this volume is really true for the upside, of course, it will take out the high. But if it isn't, if it's a fake, right? If it's a shakeout bar, and if you put a pending order for the short, according to our strategy, which is signaling all towards, it's at least the bar mechanics, right? But the trend is fighting it, which is not the best scenario really for this. But if you do want to catch a shakeout bar in the shorts and it's taken out all the buy stops of the shorts, then you can put a pending order for the low. And if you don't get a fill, that's fine. You're not in the trade. Okay. Always do a little bit of the contrarian side.
Just a quick one here. I just want to talk about that because I've
that'd be great.
emails. People say, well, you know, I've missed the move.
Yeah.
Yeah, I've missed it. I mean, it clearly reversed, right? Well, we've just created a new indicator. It's coming out next week. And I've got this guy that has got SMI, he's got VSA. He said, Gavin, I'm using a 10-tick chart, a 1 minute, 2 minute, 3 minute, 4 minute, 5 minute. And and he's got it in TradingView, right? He said, I don't miss the move. Now, you know, when I come to my part of my presentation today, which is going to be forming part of what we're going to do at the weekend, that's interesting. Market that's a fractal, right? That means that they're moving all the time. And everyone wants to know what time frame. And then everyone talks about noise and stuff. But I'll show you shortly, and I'm sure I'm just going to talk to Tira about this. When we talk about time frames, right, everyone that we teach is going to be slightly different, right? They're not going to say, oh, yeah, I just want to look at a 1 minute or a 10-tick chart. And they're all different. Everyone's different. And that's very acceptable. And then you say, okay, what's your strategy? And then they don't have one. And we'll talk about trading plans today because that's really important. But it's funny, but when you think about the logic of this, if the markets are open, and when they're open, and I'm talking about the US markets, they're moving. So they're moving in split seconds, which is what a lot of the high frequency traders are relying on. And that's exactly how they work. And so, you know, if you're taking a long-term view, you have to know that your stop is got to be in the right place. And I'm sure Thierry will explain this. If you're taking a short-term view, you can do that. You can put in a tight stop, press the button, and then let the market move. And if it goes to your favor, you can make as much money as you can make in a a long-term move and a short-term move, which is what I'm doing. I've done it in gold all night. I haven't slept. And so, Terry, just to probably explain to people the importance of time frame. What are they trying to achieve? I mean, some people
And
go,
that's
"Oh, I only
exactly
look at a
what I'm
30
seeing
minute."
here, actually, Gavin.
There, go ahead. Yeah, it's really important.
Yeah, that's what I'm seeing here on the Brent. See if we can get a trade on that. I mean, on the euro dollar, it wasn't really matching up traders. Let me see on this Brent across different time frames. It's showing me all towards the upside direction and trend. At least direction wise, I'll show you that in a minute. Upper stretch has been taken out, so biomechanics is sinking towards that. Now, in terms of the 12 o'clock range, so that's your range, or that's the high, and that's the low there. Now, let's see if we, latest is upper range, Bro to ST at the moment is still to the upside. I can see that. Now, let's take a look on the previous daily high here, and then I want to put the volume on top. So you can see this has taken out the previous day high. So that's a good sign as well towards the upside, just in capturing the range for the day. That's all we are focusing on. So everything comes together. We talked about this a lot in detail in the live trading week sessions that we did last week for 5 days in full. So watch the recordings when you get some time. Send that over to you. And then in terms of bias, I will take a look on long over here on Brent. Now, all I'm taking a look at the moment is towards timing here, right? And we will marry the volume together. I like this retracement that is done a little bit over here. It's just that it might be a bit overextended, but yesterday we took on the cable trade and you saw how it ran, even though the OE was a bit low. And here, let me see, I am getting that. This is what we want. We got a little bit of retracement, then after that, then it took out that high. Now, traders, if that is true, fake, this one is going up on the upside. That means that volume is towards the upside, but it just didn't match with my strategy there. But here, in answer to your questions there, look at this volume here. It's a big spike, and that's what me and Gavin we always look for. And what we usually see over here once we form the direction bias is that if this is really truly not selling, it will come back up and take out that high back up again, and then it will marry up with all our direction bias. Okay, so that's what we will look at. So I think in terms of that, what I will show you here as well, let me see if I can do this very quickly, and then we can place a trade. I'll push this out on the Telegram as well. Then I will pass this on to Gavin as well. And this one here, the low. In fact, we can do it for the last interruption high over here. Okay, can even go for that high. Now, in terms of the target, so let me just quickly work that out. So I've got an ATR target here, 149. Let me just do that. That's 1.19. So 1.19 from the low of today. So the low, 68.57. Okay, 68.57 plus 1.19. For those of you wondering where the reference links are for this, don't worry, I'll pass on some reference links in a minute. 69.76 is what we are looking for. Okay, so we will wait and see how that turns out to be. So that's what we got over there. Okay, so it's got to come back and take out that high before we get in towards the range of the day. Now, in terms of the stop, what I would do is, so it is doing it towards there, and towards the high. Okay, yeah, so that's a continuation pattern. I think this is fine. We can do that. So let me just quickly just take a look at this, see if we can get that trade in. So 69.31, I'll push it to the Telegram channel as well. Those of you who haven't joined it, it's a good time to join as well. Those of you on YouTube as well as on the Zoom. This is a 4-cent spread, isn't it? So it's a 4-cent, 5-cent spread. So here, what we are taking a look at is 69.30, 31, 69.36 is what we are looking at. And then the stop goes for 69.04, isn't it? Let me just quickly just double check that on the 1 hour. Is that right? 69.04, yes. Will it sustain itself? We'll wait and see. This is what happened yesterday on silver as well, as we saw. In fact, let me do it a bit more lower there. 69.03 is what we will have. And then in terms of the target, 119, probably we won't get a fill on that. It's coming back down. That's fine. 69.76. I'll just have this on a resting. Then we'll see how that plans out to be. Okay, great, traders. So I will go ahead and I'll see if this sustains the bottom. If it not, then it's invalidated. But this is what I will keep an eye on in terms of Brent. Gavin, over to you. This is what I'm looking at in Brent. Maybe you can also comment on the high volume spike here on the Brent as well, you know, on this. And then there's a potential selling over there as well. What's
Yeah,
your view?
we'll keep your chart up because it'll be quite interesting here. So first of all, you know, the market's trending up. We know that it's been trending up for a while. There is definitely a reversal here, and we've got a new indicator that we've put in, which will come to you if you've got the software, and it confirms what the SMI is showing. You're going sideways here. Where traders lose most money, and they lose most of their money, is when there's no clear direction, and so they're guessing. And I know, Tiru, you and we're very good at getting the direction right, and that's very, very important. The key to this is patience. Again, I'll keep going, and we can talk about it for hours, but I'm not going to do that. But yeah, you've got to have a plan, and trading in the right direction is very important. Now, what we see at the moment is what we call, Tom used to call it whipsawing. I loved his terminology. He said, well, Gav, you can't trade this, it's whip soaring.
Hmm.
And I said, what do you mean that? He said, it's whip soaring. I mean, he looked at me like I was stupid. And I went, well, what are you talking about? I mean, I've got to take a trade, right? He said, no, it's whip soaring. If you take a trade here, you will lose money. What most traders, they say 85% of retail traders do exactly that. Now we're starting to move, you see. And so what happens is you've got the indicator's got to be right. Okay, that's potential selling. It's professional selling, in fact. That's the new terminology. And then you can see why the market is going to be weak. He said, just wait. And the late David Weiss would say the same thing. If you look at the top right hand side of your chart, it says trend is down, phase two, right? If there, that's part of the system that Tom and myself developed, and it's showing us that we're trying to move down. But Terry, just go quickly, just for an example, go to a 1 minute chart. 1 minute.
Let's do that.
Yeah, just for fun. And it's not fun because I can see it. Now we're looking for no demand. Oh, there we go. So we're looking for no demand. Okay, as the market's trying to rally. Look how many there are. Yeah, look how many no demand bars there are in the background. And now, if you were, I mean, I can't do this because I don't know how to use Zoom, but look at the way the market's mushrooming over, which I've talked about in Trading in the Shadow of the Smart Money. And that's why it's collapsing, and it will continue to collapse. Okay, and Tua and I talk about this a lot. We say, well, and if you look at the top right again, you'll see everything's in phase one, trend down, everything's red, no demand, no demand. What is no demand? I'm going to talk about that. We're gonna discuss that today, and you're going to see this fall. Now, Tua and I talked about this. Said, well, we do this a lot. You know, we were going to talk about doing PowerPoint slides and all of this stuff, and that. No, live. Okay. While Tua has been talking, the SMI indicator in the background has been saying downward pressure, and the volume spread analysis indicators have said no demand. Let me very briefly, I mean, this is part of the thing I was going to talk about today, but you know, when you've got professional selling, my favorite indicator happens to be to short is end of riding market. But you see it all the time. And it happens as the market's going up. And when it's going up on increased volume, the retail trader says, oh, my stochastic says, Bob, I was in a webinar this morning, and I won't say who it was with, but they were saying, you've got to get long on this, you've got to do this. And I'm like, that's the wrong thing to do. It looked good at the time, but you're going to be buying a top. You don't want to buy tops, but a lot of people do. Watch what's about to happen. Okay, now everyone wants a prediction. Seriously, I've gone past it. It doesn't matter what Turu says or what I say. It's nothing to do with how you're going to make money. You've got to read the chart, and you're going to read the chart by understanding volume, spread analysis, and smart money indicator, and then educate yourself. I mean, that's it. And it doesn't take much time at all. So there's no excuse, because I hear that all the time. Oh, I just don't have time. I just don't have time. You want to make money in the market? Oh, I've lost all my money and I just don't have time. Well, if you don't have time, go and become a milkman or something, or go and become a dustman. But don't come in and say, I don't have time, because the markets are very good at taking your money if you don't have time. Right, Tira?
Absolutely, spot on, yes.
So we must observe. Now, we'll watch. If you go back to the 1 minute chart on this, Tira,
On the Brent, yeah.
Trade Nation thing, but go to 1 minute.
On the Brent oil. Yeah.
I'll show you what's going to happen.
There we go.
Okay, yeah, I'm using Turu's charts. These are not my charts. I've got my stuff up. We've got two tests. Now, we're going to talk about 3 key principles today, but this is one of them. Oh, okay. Give me a minute, Turu. I'll hand back to you. I've got someone at the door.
Yeah, no problems. So there you go, traders. So you can see that even though based on one strategy, we were taking a look at the long, right? Because when we took a look at this table over here, right? On the daily, it says uptrend, this SMC up, compression up, uptrend phase 1 and the downtrend phase 2. But all the direction-wise, they're all pointing to the upside. If you take a look, right? So it's uptrend phase 1, and then there's an SMC compression. That means it's a lower high like that, right? And then on the 1 hour, then that's a clear up as well. Phase 1 means in line with the trend. And then in terms of the 15-minute downtrend, phase 2, okay? So all are pointing to the upside, right? Now, the systematic trend recording over here and direction recording over here, according to a quantified approach, is because we got the tops and bottoms quantified here. So that's how we've got it over here, right? At with the smart money indicator, which you then marry up with the volume. So that's how we got all this, right? So the uptrend phase one, there's no compression here, and then on the 1 hour, then what the trend is, and so on and so forth. Okay, so we got all of that, and because of the top and bottom quantification, which is the unique point about the smart money indicator, and which I know some of you are asking about the links. That's what we talk about much more in detail in 7 steps to ctp.com. Okay, those of you here on the Zoom, we will send that to you. You can watch that at your own free time. Once you put your details in, then you get the videos sent to you. Okay, so that's how we are getting that table filled up over here. Okay, and the reason why we do that, the objective is to get a direction. All right, so according to this was pointing to the upside. In terms of all the stretch principle and all that, that's also was pointing to the upside. Okay, now finally, right, is what Gavin was talking about just now.
Yeah, I'm back. Just so you know, Tira, I'm back. Sorry, that
Yeah, so
was
you
a
know,
delivery.
so
I,
yeah,
I've just
let me just finish that one.
I've just added to gold. Just so you know.
Okay, that's good. Yeah, so I'll pass on the screen to you in a very short while. Just last 1 minute. So what I was saying is that, so once you got your direction bias, and I think what Gavin was saying just now is, but if you get your timing wrong, like just because the direction bias is long doesn't mean you jump into this and buy it straight away, right? So that's when you got to get the timing a bit more better, okay? So that your direction bias may be proved wrong and you're not in the trade and you don't lose your gains that you've made. Okay, so what do we all do as professionals then? For the timing, what we do, and sometimes we do get the timing wrong, don't take me wrong, as long as your probabilities are to your favor, and then your strategy will become net profitable and your numbers work out. But in terms of the timing, what do we do? So we marry up two things. So we look at the volume, right? Plus we put pending orders. So for example, so when you got a big volume spike like this, right? On that seller bar, rather than jumping into it straight away short, which can get caught out, then people can get caught out by this big bar over here. So what we wait for is a little bit of retracement, a little bit of area being cleared, then we put a pending order on it. Okay, so that's what we do. So that's what we did. We put a pending order. We're looking for that to fill on the high of that bar and the stop for the low in combination of that 1 hour as well. But you saw that because of that timing and where we placed the pending orders, we never got filled, right? And then now it's moving towards more to the downside, okay? But just because of this, always be very clear, okay? All the timing and everything all only tells you entry only. The entry of a trade doesn't put money into your pocket. It's where you exit, all right? So you need to know where your exit points are and in which relation. And then finally, the final mix to making your strategy really work is your consistency. Whatever that you do, you got to do it consistently. That's what finally gets your results to monetize. Okay, that's what you have to keep in play. And we went through all this in detail in the live trading week recordings. And when you guys get the 7 steps to CTP, you will get that as well. Once you put your details in, click on the green button, you get the 7 videos sent there, and we'll send you the live trading week recordings as well. The other thing also, if you guys do want to get the 2 indicators onto your chart, SMI and VSA page, go and check that out. I know some of you already bought that from yesterday as well. And then also the YouTube channels as well. You know, if you want to understand more about the stretch principle, we might be doing a free resources page soon that you can get it all in one place rather than going here and there. But for now, on our YouTube channel, you can find the stretch principle videos here. And once you subscribe, click on the all bell icon so that whenever we go live, Trade Guider and Master the Markets, you will get a notification on. We go live on Wednesdays. Trade Guider and Master the Markets go live together on Thursdays. So that's the youtube.com/Trade Guider. That's pretty much what I wanted to say. The last one was ETM Summit that you guys can take a look. We'll talk more about that later. It happens once a year. There'd be a great opportunity for you guys to meet me and Gavin in person, where we go through in-depth research updates and live trades as well. Okay, right. With that, I think Gavin, why don't you share your screen? Maybe you can take a look at your gold trade that you're on.
Sure. Yeah, I will do that. Can everyone see my screen? Let me just share it. Bear with me. And I'm going to go, first of all, immediately to the chart. Okay, and what I'm going to do is put up. Can you see the screen?
Yes, I think, yeah, we can.
Yeah. Can you see PB down here, the high volume.
I believe so. How about the traders? Can you all see that as well? If you can just put that into the chat box, that will help us quite a bit. Also, Gavin, as you're doing that, there's a question that come in, which is, when will we get updates for Trade Guider Smart Center MT5? And will there be future webinars using this platform?
The answer is yes, and that's been worked on. In fact, I believe Charles is who's our CTO, is going to be joining us shortly anyway. We could give you an update on that. But yeah, and check your email. Make sure you're getting our emails. A lot of people are saying then if they're subscribed and they're not receiving our emails, and this is a really good trade now. Okay, it's pushing higher. I shorted it earlier, and now it's really starting to move up, and I'll show you why based on this here. Okay, and we'll see it. But yeah, the answer is yes. It'll come out on the email. You need to make sure you're. I know we've had people saying, well, we don't receive emails from Trade Guider. Well, we've changed the whole process, and now everyone is receiving emails. So, and indeed, I think we've got several clients here who said, I've suddenly started receiving emails. Yeah, it was something to do with the authentication certificate or something. Listen, I'm not an expert in this, but we've definitely improved it, which is good. Yeah. Okay. So let me just keep an eye on this right now, because we're starting to come into the London fix. And what I'm going to do is we're going to just move this as we've got the buying that came in. And I'd had a short on earlier, and now it's completely reversed, and I'll show you why. You'll see the change in the time frames. You can change the time frames, by the way, in this. That's not a problem. But that is one of the indicators I want to talk about today, which is a little bit like a bag holding signal. Now, I found a very old PowerPoint that Tom and I put together many years ago. And it was based on this principle, right? Now, I want you to look very closely at this chart. It'll help you. We look at the volume. Is it high or low? So you tick the box. It's definitely high. It's higher than the average, which we can see from the histogram. So we know it's high. It's actually ultra high. The second thing that happens is we've got to look at the range or spread of the bar, which is very important. Okay, now keep in mind we're only on one time frame. You've got to put this into multiple time frames. You can't just stick with this and go, oh, I'll just look at the 5 minute or the 3 minute or the 1 minute. You do need to look at other time frames. But because the market's fractal. But we can see it's going up. And I know it's going to go higher. Watch. But what happens, and there we go, just have it close, and the 1 minute chart has turned green, and everything at the bottom, apart from the small time frame, which is still red, because the market's been trending down. They're buying. But that'll all turn green in front of your eyes. And you go, okay. So this is like a guide. That's why we have a company called Trade Guider. Okay. It's not trade signal, it's not trade instigator, it's none of that. It's a guide. But we can watch it. And when you put the SMI indicator over the top of it, it works even better. I've taken it off deliberately to keep it. I've taken all the VSA indicators off. Just keep this simple for the moment. I've got multiple alerts coming in on my other screen. I'm using an iPad. Now, that's what I like about this particular software. You could use, iPad, iPhone, Samsung, yeah, whatever. But I'll just keep this simple, which is what we said we would do today. What do we notice about I know I've kept the main indicators on here. So here you've got, let's just examine it. A fall in price in the background. Price is falling rapidly. But we note the volume has increased. And that's very important. That's what the smart money are. They put their footprint in. What do we notice about the range of the bar or the spread? Narrow. Very small. Where does it close? Forget the open. I've left the open on here just for fun, but I don't even use it. I want to see what the closing price does. It closed in the middle. But then you've got the most important indicator here, which we've actually programmed this in now to give you an alert. It's here. Okay, where my cross is. Which you can you see that, Terry? Where my crosshair is?
Yeah.
Yeah, that's a spring. I couldn't make this up. I mean, I when you start these seminars, you go, well, I hope I can see X, Y, Z, but just about to see probably another one. That's a spring. What it's doing is it's a mark down through an old area of support to catch stops, and people will close trades there because they're tight. They're tight on their stops and they go, I'm out. But then the next bar closes up. That has to be a buy. Well, it is. And, you know, as I went through this today, going back in time, which I you know, my wife's gone back to Chicago, so I've got plenty of time on my hands, which is quite good. I looked at this. Now look at where we're going. Okay. Right. It's going right up here. That's what I've got. I've got 3.380 as the target. That's what I've got in the point and figure charting. And the time frames, they're still negative on the small time frame because the market had fallen. There's nothing wrong with it. It's completely correct, but it's now changing behavior. And if you start to see the green indicators coming in that tested a rising market, you've got your trade. And it's not difficult to understand. Now, what I mean by that is let's talk about what the whole purpose of today's event is, which is the 3 key principles. Now, I'm going to give you all some, I think, words of wisdom from the late Tom Williams. Number one, I'm sure Terry would agree with any of this. You always pay attention to ultra high volume bars, whether they're up bars, which means they've closed higher than the previous bar, or down bars, which means they've closed lower than the previous bar. Let me be very clear on this, which I'm going to talk about on Saturday when we're doing our event. An up bar is a price bar that's closed higher than the previous close of the bar behind it. That's what we call an up bar. There's no ambiguity about it. Okay, if I'm in court and I'm giving evidence as a former police officer, I can't be ambiguous. You've got to tell the judge exactly what you saw. So let me be very clear. An up bar, as defined in volume spread analysis and the Wyckoff method, is a price bar that has closed higher than the close of the previous bar, not the high and the low of the previous bar. That's irrelevant. The closing price of the previous bar. That's very clear. I'll repeat it. An up bar in volume spread analysis is very clear. It's a price bar that has closed higher than the close of the previous bar behind it. Let's define a down bar. Really easy. Very important. A down bar is defined as a bar that has closed higher than the previous close of the bar behind it, or the closing bar behind it. It's the close we're interested in. We're not interested in the spread here. We're not interested in the range. It's the closing price and the reaction to that closing price. And in the event I'm doing on Saturday, and I know many of you are coming to it, I'm going to be much more specific on this. I'm going to keep it. We're doing this within a 3-hour period. It's going to be really quick because the information we've condensed is exactly what I'm sort of talking about here. Now, I want to, before I hand back to Tiru, to show you something from the past. All right, so we can see what's going on here. Okay, we're not wrong. There's your shakeout bar. I could put up multiple time frames. This is all going to start to turn green, but that's not what I'm here to do. And what I want to do is show you Tiru, can you see my screen?
Yeah, I think I should be able to. Let me see.
It should say the hidden secrets of volume.
We just had a question on
Yes, Gavin.
Eurodollar, but yes, I think yeah, we just had a trigger on that as well on Eurodollar. But yeah, carry on. Yes, yeah, I can see this.
Okay, I'm going to keep it because we will go back to live charts, but this was an event we did with Thomson Reuters Metastock back in 2010. Why is it relevant today? Well, it is. Because what's happening in the markets right now is what happened then. And this is the wonderful thing about being a trader and investor. You meet new people, which I've done, Tiru's done, Glenn's done, Kyron, who's out there both in India, have done. We've met people. Now, ultimately, we teach. But what do we actually teach? So I'm just going to go through this. That's me. That's my, obviously I was much better looking then than I am now, but that's fine. Trading in the shadow of the smart money. What the hell is that about? Well, I won't go into it. It's most of you know, a lot of you got the book. It's about following the smart money. And this is what I wrote at the time when I was with Tom. The objective for the webinar at that time was to learn how you can profit by understanding why markets are manipulated and how to identify the footprints on a chart to trade in. Now, keep in mind, this is it's an old PowerPoint, but it's so relevant. I decided to come back to it. And then here we've got 2 of our customers that made money winning competitions. And you can see there that there's Earl Aaron Lur, and then we had Tim Raymond. But the key to this is, what is volume spread analysis? What's the basis of it? And this slide summarizes it. Most traders are aware of the 2 widely known approaches used to analyze a market, fundamental and technical, which most people do. Many different methods can be used in each approach, but generally speaking, fundamental analysis is concerned with the question of why it's about to happen, and technical analysis attempts to answer the question of when it's going to happen. And then I'll add in smart money indicator, would also give you an indication of when something's going to happen. But volume spread analysis is a third approach to analyzing a market. It combines the best of both the fundamental and technical analysis into a singular approach that answers both questions of why and when. Now, why have we partnered with Master of the Markets and the team there? Because they've added another dimension onto the top of VSA, which we like. We don't partner with anyone else. You'll note that. Yeah. So we're very selective. And, the reason is the SMI indicator, the smart money indicator, and the teachings of Master of the Markets work very complementary with what we do. Simply put, and I'm going to keep it real simple, we establish the cause of price movement. Okay, so does Tiru. We look at the imbalances of supply and demand, cause and effect, effort versus result that we're charting, and we're using Tiru's approach and my approach. Now, that doesn't mean we're right or we're wrong at all. We're not trying to prove ourselves to be right or wrong. What we do is teach a method that we both use consistently. And I live in a very nice property down here in Sandbanks, one of the most expensive places in the United Kingdom. And I've got that simply because I've believed in the methodology. And that is what I believe is the key to success. You can do all sorts of things. You can click buttons, you can gamble, you can go out to the casinos, you can do what you want. But to be successful, you have to have a strategy. And if you have a strategy and you follow the rules and you've learned correctly, and if you ever see Tiru and he puts his camera on, you see all the books on his bookshelf behind him, Tony Robbins, all these people, you'll learn that successful people learn and emulate others who are successful. Well, you have to. That's what I've done in my life.
Gavin, just a quick point over there. I think two main updates. I think there's quite a few questions coming in. One question is, how would you interpret euro-dollar action based on VSA, which is what we've taken along. I pushed it on Telegram as well. I put it on the message on Zoom as well, but you can talk about it later as well. The other thing is, Mohsen Mahmoudi, if I pronounce your name correctly, has raised his hand. So Mohsen, if you can, just type in your question or whatever query you may have, that'd be great, into the chat box. If you can see the chat box at the bottom, you can just type in your question. Yeah, sorry, Gavin. Yeah, that's one.
No, that's fine. No, you listen. Please, if you've got questions, type them in because we're happy to answer. I'm going to get to the chart shortly. But let me just talk about, one of the things of this seminar that we talked about was the three most important indicators, right? We said that we would talk about that. And I want to keep on call with that. But I know a lot of you we've added 886 people into the database in the last few days. That means that you don't know what the hell we're talking about. So I've got to keep this to the point, but volume indicates the amount of activity on the price bar, and the spread or range of the bar shows what the price actually did, and most importantly, where it finally closed. Very important. There we go. Volume spread analysis. And when we oh, stop it. And then we put smart money indicator over the top of it, it shows us. And by the way, I've got two spaniels, which you can hear, and they're great traders. Hold on a second. Right, Chiro, take it back. I'm going to have to put the spaniels on the cage. There's a. You're going to love this, everyone. There's a fox in the garden. So I'm going to hand. No, actually, no. I'm going to be all right. Actually, they're fine. They're fine. So volume spread analysis. What we're looking at, we're looking at volume, which is here, and it's very important because what is volume? It's activity. Just give me a second. I'm just going to put this dog out.
I think this is Gavin is coming back.
That's quite funny. Yeah, I can't believe it. I live in Sandbanks, right, in the south, and we have this fox that is absolutely beautiful. It's a lovely animal. I would never harm it, but it jumps over the fence and comes in, and you just heard the dogs. Anyway, because they look at it and they go. Arr. Anyway, should I go long gold or short now? Oh yeah, well they'll bark if they see something. Anyway, volume spread analysis, and it's very important. Does it work in all markets? Of course it does. Yes. Yeah, this is the confusing part, and it's a bit like the SMI indicator. People ask me, does this work for Forex? Does it work for crypto? Absolutely, 100%. And the reason is we're not charting mathematical things. We're charting supply and demand, cause and effect, effort versus result. And how did this all start? Well, here. And we'll go into a lot more detail. And I know a lot of you here are coming to the event this weekend that we'll talk about this. But the man that taught me was this guy here, Tom Williams. He passed away. I was with him in 2016, November the 7th, and never forget it. Because he'd given me the knowledge, and then, but his knowledge came from Richard Wyckoff, who was a very famous investor, trader, based again where Tom was, out of Beverly Hills, and then he was in New York, and very, very, very experienced guys, you know, with a lot of knowledge, trying to help people to understand how the markets work. And I just watched a great. I don't really follow the news much, but I try not to. But I did. My wife Laura did say, you want to watch this film, The Wolf of Wall Street, about I forget the guy. Someone Belfort. I don't know. Someone can tell me. Jordan Belfort. But anyway, she said, watch this. This happened. This was real. This is not a made up story, although of course if they make it into a film, it slightly is. And that was about like bucket shops, right? Where pump and dump, and that still happens today. And I'm
I mean,
surprised.
just a quick point on that. Euro dollar is racing towards the target on price and volume, and I know that actually fits.
Well, take the screen quickly. Go ahead. Let's have a look.
Yeah, let's
Yeah, let's have a quick look. Yeah, because I'm seeing the same thing.
I think that's on in relation to the question of Fitzroy, actually. From YouTube, we had a question.
Okay. Yeah, go ahead. There's no rush.
What would you say about euro dollar based on?
Yeah, there it goes. Yeah, I've seen it.
I think you guys can see that. I pushed it on Telegram as well. We saw that anyway, and you guys saw that. It wasn't the best match for that strategy rules, as I explained on Zoom, but on a price and volume match strategy, which overwrites the trend correlations from before, then this is a good one. And what we did is we did an extra layer actually, we waited for a bit of a seller bar, and then put the entry for that if the buying pressure is real, and to take out that, and then the target is towards the range. I think you will face this as well, isn't it? I mean, I'm sure you face this in the questions, Gavin. I think people don't have the patience sometimes, you know.
Well, actually, to put the 1 minute, yeah, the dogs agree with you. Put a 1 minute chart. It's really interesting.
Euro dollar, yeah, it's just coming near to the target here. 1788 is what we got over here. I did put it on a lower risk because it didn't really match all our strategy rules, but this is a pure perfect SMI and VSA match over here. But the key thing is to understand the price properly with the match of the volume. Let me put this on the 1 minute, like you're suggesting here. On the 1 minute. And it's all recorded on the Telegram channel as well, which you guys will be able to see. The high 11787, isn't it? We just need
that's it.
One more pip to those target. Yeah, carry on.
Look at the volume on that right at the bottom on the 1 minute chart. It's a shakeout. It's a spring. It's what I've been talking about on a big no. Go down, go backwards. That one.
Yeah, yeah.
That is it. That's where the buyer stepped in. Yeah, got it. Very obvious. And I've got it on my other screen anyway. It sent out an email alert at the time, and yeah, it's fine. And you go back to gold. If you go back to gold, go to 1 minute of gold, you'll see.
Yeah, let's go on that one.
It's beautiful. It's like exactly what you want.
There we go.
Yeah, and you go for it. Yep. So it
had
a bounce. Right?
You want the 1 minute or?
I'd do the 1 minute. Yeah, you'll see why it's reversing. Yep. And then you should see a no demand. But oh, there it is. There you go. Right at the top. Is it?
Yeah.
Yeah. No demand. Yeah. It went up on no demand, and so that's why it came back down. Now you talk about something which I think you can discuss, and I'll have to get you to talk about this, but talk about the dance of the market. So what are traders looking for and investors looking for? Certainty, right? They don't want to do, oh, it's dancing. No, it's going up and then going down. I don't know. And in my mentorship programs, I do this all the time. I say, well, what's your strategy? They don't really have one, many of them. And we talk about this all the time. I said, well, you're gonna have, you must have a strategy, right? You must have, okay, this is the way I'm going to go. But the markets do not work in one direction, do they? They're like, it's like, I was trying to explain it to a client the other day who was talking to me, and he said, I'm really struggling. And I said, okay, what's the problem? He said, well, the markets go up and then they go straight back down and then they go straight back up. And I said, okay, that's the dance. But what time frames are you using? You know, are you an investor? Are you a trader? Are you a scalper? He didn't know.
There we go. Just hit target, Gavin.
Yeah, it will do. It absolutely has to.
11788. That's recorded on Telegram as well. So
Yep,
yeah.
has to. Has to. We've nailed it. And that's good. And you can put, anything over that, overlaying it. It was there. But just to quickly go back to gold, because I'm about to hit
It's
my
on
target.
gold at the moment. 1 minute, yes.
Oh, there it is. Okay. Now, this is coming into the London fix, and that's in 15 minutes' time. We're not going to spend much more time on this. But what happens or tends to happen at this time, sorry, I'm just getting some alerts coming in.
I just had Paul say, thanks, Paul, for that. Well done. I was just typing it for you, Paul. It looks like you're the lucky charm. Anytime you're in the webinar, we always catch really good trades. Last time you were in person with us in London on Westminster Plaza, London, where we are doing the summit. Brent Oil hit all 3 targets. I'm sure you remember that. That was a really great session we had, all in person. It's really good. Mawson, you're saying thank you, Raj. Everything is very good. Okay, that's no problems, Mawson. Fitzroy, hopefully we did answer your question. I know that came from on YouTube, right? So to read out that question, how would you interpret euro-dollar action based on VSA? And I think we just did that in real time on euro-dollar, and we published it also on Telegram as well. And I think Gavin also did mention here, you see, we're looking at the big volume spikes, and we're correlating that according to your strategy rules. And I'm sure Gavin will go through that much more in detail over the weekend when you guys join him for the webinar. But remember, I think, Gavin, we have to also stress to them that I think a lot of people, what they look for is they're looking just for a quick fix. Sometimes some people, what they do, oh yeah, that's a big volume spike. You know what? Let me just jump into the trade, and it's a buyer bar. But it doesn't work like that, isn't it? It's the whole background must match up with the price and the volume, and then you get in with your strategy rules clearly defined. Isn't that true, Gavin?
It's completely correct. I'm going to summarize because I know we don't want to make this a really long webinar. So, no,
Yeah, we've
no.
gone past
So
time.
let me summarize. What do you want to be looking for as a trader or an investor? Forget the time frames for a minute, because you can adapt those time frames to your strategy. Now, you could wake up in the morning and say, I'm going to be a scalper today, and I'm going to do a 10 tick, 1 minute, 3 minute, 5 minute shot. That's up to you. You could say, I'm an investor. I'm going to do a 15-minute, 30-minute, 4-hour and daily weekly chart, which I actually use quite a lot. Okay, nothing wrong with either of them. What you're actually trying to look for, and we talked about the 3 things, and we're going to really focus on this in our event at the weekend, is how do we find trades? Well, that's the difficult part. Now, the first thing we look for, without doubt, is a ultra high volume spike in multiple time frames. Now, what we've got here right now, as the market's falling, is the SMI indicator. There, you saw it, but then it doesn't matter because it works. So the first thing we're going to look for is unusual volume spikes. And it can be up. Now, when I mean up, it means the market's falling and the volume compresses the bar. Okay, so when I say the bar, it's the price bar. So you get, if you want to see bag holding, which is one of our strongest indicators, which Charles has programmed in, you see the market collapsing, and then the range of the bar doesn't spread high, it goes narrower and narrower and narrower and closes in the middle. And then eventually the next bar closes higher and you've got your start. That's a great indicator. I mean, that's why we've programmed it in. The second one is the top, where the news is good, everyone's saying the pound's going up, the British government are doing this and the market, and it's just happened. And you get end of a rising market and the pound collapses. It did. And it's what Tom told me. He said the volume will increase, everyone will be buying, everyone will be using their MACD, their moving average, their stochastic, whatever they're going to use. They may not use VSA at all. And then all of a sudden, they're a loser. They suddenly lose money because they don't understand. They're like, oh, hold on a second. Why is the market going against me? Why is the pound falling? Which is exactly what it's done. For goodness sake, people, wake up. And I say wake up because people have lost money. And Richard Ney, who wrote a great book about the markets, I mean, the one I like, is Making It in the Markets. There's others. But he had a Rolls Royce. And he lived in Beverly Hills. And his number plate was WAKE space UP. Wake up. Yeah, that's a true story. And you can go and check it. And finally, I'll give you this piece of advice. When we look at the three most important indicators, which is what this is all about, end of a rising market. That's to short. It's at the top. It's when the news is good and you're all bullish. Bag holding. When the market falls, massive volume, narrow spread, closes in the middle, next bar up. And then the thing that we're putting into the software right now, which is the 2-bar reversal. It's a reversal. You've seen them today. Live. But imagine if the software could alert you to this and say, this has happened. This is right in front of your eyes. And you can do it on your smartphone. That's why we're working very closely with TradingView. And we'll show you this on Saturday. Many of you are already registered. And then we'll add over the SMI smart money indicator on it. And then all you've got is I would call it like a pilot taking his plane and looking at the checklist. And you get your checklist and you say, right, check, 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 and you tick the checklist. And we've got that checklist. And then all we've got to do is follow the rules, but many won't follow the rules, unfortunately. I know this because I've met many of the traders I've taught, and they say, I'm still struggling, Gavin, and they don't follow the checklist. They go, I can't wait. No, I can't wait for that. I can't wait for that. I can't wait for that. And I don't know why. But Tura and I will figure that one out. Anyway, thank you so much to all of you. Tura and I are here to help you. We hope to see you at the London event. It's going to be great. Looking forward to it myself. And Tura, back to you.
Great, traders. I think this has been a great session. I think we went through quite a bit over here. I think the last question that we just had in come in, very interesting name actually. I don't know why it says illegal immigrant. I think the Home Office is going to come after you if you name yourself that. But anyway, your question was, how did you choose that target? The targets are usually based on, for the strategy rules, it's based on recurring principles. So that's how we take a look at that. On this particular thing on euro dollar, which I took a look at, is based on first the stretch principle plus the target based on a range of the daily bar. Okay, that's what we're taking a look at. Also, another way that we also select the target on lower time frames is we got what we call the open equity tables, which is what you can see over here on this table. This has measured all the swing distances from the last 15 years on the different time frames, and this will tell you on a probability basis what the number of pips you can go to on any time frame that you got. Okay, and trading is supposed to be based on probabilities, and that's how we actually get the target. But that doesn't mean that's how you construct your strategy. This can be a guideline, and you can even choose a trailing stop, which what Gavin does, that fits his personality, and you can keep riding it. This really sets your expectations, and from here you can set different targets for different strategies as well. Okay, all that comes under strategy construction. The best place I would say that would you can start from would be here. Okay, at 7stepstoctp.com. I would say start from there, and then once you put your details in, hit the green button, then come to get these 7 videos. I would say I highly recommend this because it's 15 years of collated research. You can put this on any strategy that you're doing. It's based on principles, okay, cross-transferable, and also you can use this with volume as well. We talk about that over here too in the videos. And then also, if you guys want to get the indicator on top of your screens, SMI plus VSA, you can go onto this page. You can take a look at that. Another thing, if you want to catch us live, every Wednesday and Thursday we go live. Wednesdays we go live on Master the Market channel, and on Thursdays we go live on Trade Guider channel. So to get to both YouTube channels, youtube.com/Master the Markets, and then after you click the subscribe button, click the all bell icon as well. Same thing for Trade Guider channel, youtube.com/Trade Guider. After you click the subscribe button, and then you click on the all bell icon. In terms of some of the questions that you guys asked about price and volume and stretch and target, highly recommend watching these videos on YouTube as well, called the stretch principle videos. Okay, so you can take a look at that as well. The final thing, I just want to give a shout out to Trade Nation as well, who's helped us with the signal providing on the Telegram as well. And if you guys want to open up an account at Trade Nation, you can follow the links on the Telegram channel. The last thing I want to mention is the annual summit. As I mentioned, some of you have been asking us questions on this. Quite excited to see me and Gavin in person. This happens once a year, where all of us, the greatest of minds, come together. Really great traders in our community that we've got. The passion that they have, the determination that they have, and the intelligence. Really some smart people there that actually inspire us and keep us going for all these years. Same for the Trade Guider community, same for Master the Markets. Amazing community we're forming together in this partnership of Master the Markets and Trade Guider. So that's happening on the 10th and 11th of October. It's happening in central London, overlooking the beautiful views of the Thames River. Both days we will provide lunch, as well as on the first day there will be nice dinner, a nice intimate setting where we can all get together. I highly recommend this. I know a lot of you have said, you know what, you've always seen us in virtual, you want to see us in person, in flesh and blood, and also make sure that we are not AI constructs. So this is a great opportunity for you guys to come and check all that out. Okay, that's happening in Westminster, London. What we're going to be covering, a lot of live trading as well as research updates as well. We'll be doing in-depth research updates on how we can put that together and make your price and volume strategy more robust. It'll be a great start and a reboost on this summit, and then you can re-energize for the new year as well. So highly recommend that. Look forward to seeing you guys. I know some of you already booked your tickets, but that's great news, and I look forward to seeing many of you more as well.
Yeah, yeah, Tiru.
Yeah.
I've got some bad news.
Yeah, what is it?
I'm a robot.
All right.
I don't actually. I'm Sherlock Holmes. I don't actually exist. So if you want to meet me in person, it'll be like an AI. No, I'm joking. I can't wait. I've already got some clients that are coming to the event, and yeah, I know you joke about AI and all of this, but it's actually quite important because actually you don't know what you're looking at.
Exactly.
You seriously, you don't know. You know, human beings interact best when they're all around the table trading and looking at charts, which is what I've done in the past. And I know that you and I have done many of these events online, and they're great, and we can see the charts. We're not wrong many times. But yeah, no, just to be serious for a minute, yeah, no, this is a very important thing. It's nothing to do necessarily with just looking at charts. It's creating a network of people that connect with each other, right? And that's what I've seen in the past. You know, we've done events in Chicago, New York, Canada. We've done events all over the place, and then people become friends, and then they connect, and then they make money together, and then they love life. And I say it's such an important part that you're here for a short period of time. You don't know what time you've got. I just lost a friend of mine who was 52 quite recently, and I went to his funeral, and I realised just how life precious is. And you go to these events and you meet people, and do you know something? You can't do it on a webinar. It's right. You can try, but it's even Zoom, even with a camera, it doesn't connect you.
Yeah, there's a big difference when you do in person. That's why we highly recommend you guys once a year. So looking forward to seeing you all over there, and it'll be a great catch up over lunch and dinner, and also um, the research updates and everything that we'll be sharing with you, plus along with live trading. I think with that said, sorry guys, I know we run past time quite a little bit, but it was well worth the session. Great trades as well, great learnings. We will do a wrap up over here, and as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master. Take care and bye for now.
Thanks, everyone.